Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about WEIMOB INC interim report. WEIMOB Inc. offers a diverse range of digital commerce and media services to businesses in China. The company's primary services include cloud-hosted commerce and marketing software, as-a-service products, customized software development, software customization services, ERP solutions, including WEIMOB, Smart Retail, Smart Hotel, Heading ERP, value-added services for merchants, including plus online advertising, traffic purchasing, plus online marketing support services, plus in-depth operation and marketing services. The skyrocketing stock price of WEIMOB Inc. A year of transformation. WEIMOB Inc.'s stock price has witnessed a remarkable surge of 100.82% in the past year, driven by several key factors that have contributed to its revaluation. One significant development is the company's turnaround from losses to profits, with an adjusted net profit of 16.9 million yuan for the first half of 2025. This financial improvement has been a major catalyst for the stock price increase. Additionally, WEIMOB Group's efforts to reduce costs and improve efficiency have led to a significant decrease in losses, narrowing to RMB 46 million in the first half of 2024. The company's strategic investments, including securing $100 million from international investors for business expansion and AI development, have also boosted investor confidence. Furthermore, the leadership's commitment to the company's growth is evident in Chairman Sun Taoyang's increased stake in WEIMOB Inc., which led to a notable stock jump of 16.05% on August 25, 2025. Analysts' optimistic projections of accelerated growth and reduced losses have also contributed to the stock price surge. Overall, WEIMOB Inc.'s transformation from a loss-making company to a profitable one has been a major driver of its skyrocketing stock price in the past year. The company's strategic investments, leadership confidence, and analyst optimism have further fueled this growth, positioning WEIMOB Inc. for continued success in the future. The primary drivers of revenue growth and decline can be summarized as follows. Revenue growth drivers. The company's revenue has grown due to breakthroughs in AI-related revenue, increased consumption on Zhao Hongshu platform, expansion of AI technology applications within SaaS platforms, and deepening of WeChat e-commerce ecosystem. Additionally, the integration of WeChat Mini Shop has exceeded RMB 50 million per month, with a monthly growth rate of around 100%. Revenue decline drivers. On the other hand, revenue decline is attributed to reduction in rebate rates by advertising platforms, downsizing of lower-profit subscription business, and external macro environment and budget constraints. The company has also experienced an increase in attrition rate, decrease in number of paying merchants, and a year-on-year decrease of 10.1% in subscription solutions due to weak macro economy and lackluster consumption. Net income and profit margins. A shift in fortune. The financial summary reveals a significant transformation in net income and profit margins for the company. Initially, net income increased by 109% to RMB 17 million, but this growth was temporarily hindered by a $1,500,000 decrease due to increased expenses from RSU vesting conditions. However, this setback was offset by a subsequent increase of $7 million from capital contributions. Profit margins also underwent notable changes. The gross profit margin rose from 66.4% to 75.1%, but then declined to 59.6% in 2024 compared to the previous year. In contrast, Merchant Solutions saw its gross profit margin surge from 74.5% to 91.3%. Adjusted gross margin and EBITDA margin also improved significantly, with the latter turning a loss into a profit of RMB 72 million. The operating margin increased from 0% to 6%, while the net margin attributable to equity holders of the company improved from 4.3% to 3.1%. These changes indicate a shift towards profitability and financial stability for the company, driven by strategic decisions and operational improvements. The company's financial performance indicates a lack of positive operating cash flow. Despite some fluctuations, the data on pages 6 and 42 clearly show that there has been a slight outflow and a net cash used in operating activities, respectively. This suggests that the company is not generating sufficient revenue to cover its operational expenses, resulting in a negative operating cash flow. The company's debt level and interest expenses have undergone some changes over the past year. while long-term borrowings have increased by 57% from RM 158,642 to RM 149,894. This growth is somewhat offset by a decrease in net debt from RM 947,855 million to RM 890,502 million. Additionally, finance costs and interest expenses on borrowings have decreased, with the latter decreasing by RM 120,000. Overall, there is no clear indication of a significant increase in debt level or interest expenses. Segments/regions performance overview. The company's financial performance reveals mixed results across its segments. In subscription solutions, revenue and gross profit declined by 9.7% and 6.2%, respectively. Conversely, merchant solutions saw a decrease in revenue, but an increase in gross profit of 8.7%. The geographical distribution of non-current assets is primarily located in the PRC, but no specific regional performance data is provided. Management's commitment to AI technology. The company remains committed to leveraging artificial intelligence, AI, as its core driving force. This focus will be applied across various scenarios, including e-commerce and retail, with the goal of widespread adoption and implementation of AI agent technology. The management's philosophy is centered around technology-driven business growth, aimed at facilitating merchants' digital transformation and sustainable growth. As a result, new revenue streams are being explored, particularly those related to AI. The company has a history of paying dividends to its shareholders, demonstrating a commitment to returning value to its investors. This practice indicates that the company is financially stable and confident in its ability to generate consistent earnings. That concludes the financial summary for WEIMOB INC. Feel free to comment below, and I will be happy to answer them when possible.